Hello, I'm Tom Selby, AJ Bell's Senior Analyst, and in this latest edition of our regular markets review, Breaking the Mould, I'm going to take a look at insurance, fizzy drinks, and industrial metals. All of these are likely to cause a fuss in the week ahead. And that's because on Tuesday, the 9th of August, we'll get first half results from life insurance giant Legal & General. On Thursday, the 11th of August, drinks bottler Coca-Cola HBC will also publish its interim results. And Glencore will release a second quarter production report, also on Thursday the 11th of August. So let's get cracking with those Legal & General interim results. The FTSE 100 firm's shares have taken a drubbing in the wake of the EU referendum vote on the 23rd of June. But as this chart shows, they had already been pretty weak, owing to concerns over what record low interest rates might do to the company's business model and ability to meet its long-term liabilities. The stock has since forged a tentative rally, helped by reassuring trading update on the 28th of June and strong new retirement business data. So let's see what boss Nigel Wilson has to say about the firm's performance. The key issues for investors to watch out for here are growth in profits. The analyst consensus is looking for around 9% growth in earnings per share for the full year. It's also worth keeping an eye out for growth in cash flow. Last year's rate of advance was 14%. And any advance in the interim dividend. Again, we're looking at analyst consensus here for the full year, calls for 7% increase, enough to put the stock on a yield of around 7%, which may catch the eye of income hunters even if earnings cover is thinner than ideal at 1.4 times, again according to the consensus estimates. This chart here shows the 10-year progression in Legal & General's interim and final dividend payments. Also watch for commentary on fund flows at Legal & General Investment Management, the firm's asset management arm, new business wins at retirement, and any update on the firm's regulatory capital surplus under Europe's Solvency II rules. As a final point, note that it's a big week for the insurance sector, with Standard Life also due to report interims on the 9th, Prudential following on the 10th of August, and Old Mutual on the 11th. The last named company, Old Mutual, may provide an update on its plans to break itself up into 4 separate firms, so keep an eye out for that. 2 days later, on Thursday the 11th of August, one of the FTSE 100's less well-known firms, Coca-Cola HBC, or Hellenic Bottling Company to use its full name, will release its first half figures. These shares have done well since the British vote to leave the EU, not least as the company has very little UK exposure and is much more reliant on Eastern Europe. The pound's decline makes these overseas earnings more valuable in sterling terms. May's first quarter update wasn't actually too bad, as total bottled drink volumes rose by 0.1%, as developing and emerging markets did better than established ones, as shown by the bars here. The line then shows sales growth, which was less good. When you study the results, the trends here will be important, while your research should also focus on how well the company is doing with regard to its medium growth targets, as discussed on an investor day in June. These targets assume average annual non-alcoholic ready-to-drink industry volume growth of approximately 1.5% a year across the company's target markets, and they are average annual revenue growth rate in the range of 4 to 5% on a currency-neutral basis, a reduction in comparable operating expenses as a percentage of net sales revenue from 29% to 26 or 27%, an increase in the operating margin from 7.5% to 11%. That just leaves us with Glencore's Q2 production report, also due on Thursday the 11th of August. After last year's collapse, sparked by worries over falling commodity prices, the company's debt burden and a dividend cut, the shares have rallied strongly this year, helped by tentative improvements in raw materials and efforts launched by boss Ivan Glassenberg to cut costs and pay down debt. The Q1 production report offered some evidence of these initiatives, as Glencore cut output in several areas, and the May statement will be our benchmark here. In Q1, copper production fell by 4%, coal was down by 17%, and zinc was down by 28%, while nickel production was up by 16%. The only real disappointment was oil, where the firm downgraded output guidance for the year. The other key number to watch out for here is guidance from Mr. Glassenberg on the key trading arm's profits, which he left unchanged at $2.4 to $2.7 billion back in May. Thank you very much for watching, and I look forward to seeing you again next time.